Good afternoon, everybody. How you guys doing? Good? Good? Sweet. All right. I'd like to first bring up, you saw him before, Andrew Bruce, CEO of Data Gumbo. Come on up, Andrew. Total game show. Next up, Allison Clift-Jennings from Filament. I'm going to have them do their introductions as they come in because they do introductions of themselves much better than I would. Next, Krishna Danda from GE Ventures. Krishna's a new face. Then Sharon Yin from the Yin Law Firm.
Sure.
And finally, Michael Skadden, international corporate attorney.
Sure.
Come on up. Little musical chairs. We're going to start off with some intros from some of the folks, especially folks that we haven't heard from before, and then we'll pop into some questions that we've talked through. So I'm going to start with Andrew.
Does this work? Yes. Hello, I'm Andrew. You met me before. What you don't know is I'm from the Isle of Man. And if you don't know anything about the Isle of Man, it's famous for tax evasion and motorcycle racing. Tax evasion and blockchain. Huh. That could be interesting. Sorry, completely aside. Data Gumbo was formed 2 years ago. Background in equipment manufacturing, National Oil Varco, and Aqua Solutions Drilling, ran global operations for them. From a funding perspective, Data Gumbo was completely bootstrapped from the beginning by 3 founders. We recently have opened a convertible note, which we are using for funding, and going out for an equity round during the summertime.
Hi, my name is Allison Clift-Jennings with Filament. Most of you probably heard me talk all about the hardware side earlier. Personally, I come from an engineering background, so I have a computer science degree focused very much around my degree was actually a hybrid of an EE and a CS degree, meaning that we get to deal with a lot of hardware and software and firmware, which has been very helpful for my career. But I've been in the startup world about 22 years now in my professional career, and infamously, this is startup number 7 for me. The other ones were failures. So if that's any indicator onto finding the right spot, I should probably be the poster child for that.
Lots of good learning, though.
Hi, everyone. I'm Sharon. I run a digital currency and blockchain law practice. I actually got in the space in late 2012, early 2013 through Bitcoin as a hobby, right? And over time, I started to get some legal work in the space. And then in the last 2-3 years, this area has really just exploded. So it allowed me to sort of just transition my practice. Prior to my practice now, I litigated for about 8 years.
Great. I think this mic actually works.
Yeah,
we're okay.
We can hear you.
That's nice. My name is Krishna Danda. I work at GE Ventures. I was an engineer previously and a consultant after that, and went to business school, and then after that was at JP Morgan for a while before joining GE Ventures. So kind of a roundabout path of getting there. But for those of you that aren't familiar with GE Ventures, we're the corporate venture capital arm of General Electric, essentially looking to deploy around $200 million or so every year into startups, usually stage agnostic, Series A and onwards. And our typical check size for each of those companies is typically $3 to $10 million is the range, and we stay on to continue to fund investments throughout the life cycle of that company. Looking for companies to invest in that are strategic to GE, and that's a broad term since GE is a conglomerate, but and then also that give us a decent financial return as well. So good to be here.
Good afternoon. My name is Michael Skadden. My law firm is called the Law Office of Michael Skadden. I have an office in Madrid and one here in Houston. I do international tax and corporate work, and indeed the Isle of Man is a very fine offshore. However, thanks to this, I get to spend a lot of time in jurisdictions which have very fine beaches, beautiful women, and very good rum. But I do want to make a little point that we'll get to maybe a little later. There is a difference between tax avoidance and tax evasion. Tax avoidance is good. It makes me money and it makes you a lot of money. Tax evasion, bad. Leavenworth. Fort Leavenworth, not good. So we'll see what we have to say about blockchain and some cyber currencies.
Super. All right. One thing I took from Andrew's presentation, you had a number of different applications up there. One wonders from an investment perspective, and I assume from the audience, is how do you know where to focus? Right? There's so much tire kicking revenue. I'm sorry, not revenue, but dollars out there in the industrial world where I live, and the rest of us live, I think, that it can be a bit much. So I'd love to hear more about, how you decide to focus.
It's quite easy for us. We started in the drilling business, and the first opportunity we had was in the drilling business, so we stuck to the drilling business. And the challenge, as you point out, is that once you start to understand the blockchain potential of automating transactions in general, then it's a matter of saying, okay, how do you focus? Do you stick to your knitting, or do you? And how big is this as opportunity? How fast can you and should you grow? Our position is that there's a lot of people solving insurance and finance and other transactional things. There's not as many people focusing on the industrial application of blockchain, and that's something that the technology we've developed and everything else is focused very much on the industrial application. So even though that's a huge space, so we are starting with drilling and then organically growing where our customer base takes us, because if you're involved with the super majors, you're now quickly involved in supply chain and everything else. So they drag you very, very quickly. So then it's a matter of managing growth and funding that growth, and that's the challenge.
Allison, you've had you're probably the most mature of companies that are in kind of blockchain from a fundraising perspective. You've raised a fair bit of money from some very high quality investors other than me. But I'm just curious, how have you navigated that world and gotten such a good, strong syndicate?
The tire kicking that you mentioned earlier almost killed us in our history. You do remember this, yeah. So it's very, very dangerous as a horizontal platform play in this space, because there's so much interest that you can get very jaded by the amazing interest, right? And then all of a sudden what happens is you have tire kickers. Sorry?
Maybe the microphone closer.
Oh, sorry. Is that better? Okay.
Yep.
My apologies. Quickly, our company almost died from tire kickers. And as a horizontal platform play, you cannot waste time with people who are not serious. The problem is you're asking C-level executives at major multinationals to change the way they do business. And so it takes some time. A lot of our work was educational. And I don't want this to sound trite or smug, but I think our trick for raising the capital that we did from some really fantastic investors, including you, was because we pitched a very large vision, and we said we're only going to make this huge or we're not going to do it. No little side things. We want to allow machines to be economic in nature. Like, that's it. That's the one-line pitch. The rest is how, when, who, what, and that's what we now spend all of our time on. But our company comes from a background of deep tech. So our CTO, Jeremy Miller, founded a company about 15 years ago called Jabber. It was an instant messaging protocol. Many of you definitely used it. If you use Google Chat or Facebook Messenger for 10 years, 8 years, you used it. And so we like to solve hard problems and build big things. And really, that was the way that we pitched the company and what we focused on. We had to readjust a lot. We are still readjusting in some ways, but we believe now very much that it's now time to start to build these things. And we're starting to get some C-level buy-in at major multinationals. Now, it takes years to build these relationships and to get them to consider, but I think it's now happening. It seems like it. I could be wrong again, but so far it does seem like it's starting to happen. And I think that a strong vision, a big story is what allows you to fundraise.
I agree. And use cases. So Sharon, you got a unique view, and you've been in this world for a lot longer than actually most of us, right? From 2012.
Yeah, but I always tell people, back in those days, you're really just talking to other nerds and weirdos on the internet, so, which was totally what I was doing, So it wasn't very serious.
Well, you're super cool now.
I don't know about that. I certainly get invited to more stuff now.
But what trends now? Kind of fast forward. What trends now are you seeing from a startup perspective, kind of over and above what we have not already kind of covered, right? Are there specific interesting trends you're seeing, within the world of blockchain?
Sure. I mean, I would say that right now, one of the problems in this space is that the funding far outpaces the talent, right? So if you just mention the word blockchain, everyone's like, oh, yeah, sure, here, take my money, right? I mean, that's basically what's happening. But these things, particularly software, they're really, really difficult to get right, right? Software takes time to make. And the investors included, they're not very patient. Because they're hearing, particularly in the cryptocurrency market, right? These companies can release a token, and within 6 months, mostly retail investors, they want to have 5x, 10x, or 50x their money. So I mean, I would say one of the problems right now that I'm seeing in the VC world is just that there's a lot of funding, but not a lot of good end products.
So, Krishna, I'd love to hear kind of your take on what your the sort of GE digital perspective is on blockchain. You guys are partnering in a lot of different sort of industry partnerships, and so how is that informing your investment view from sort of the mothership when it comes to this world?
Yep, absolutely. And maybe a little bit of a point that Allison made. It takes a while to educate large conglomerates and large industry players about blockchain and the advantages of those and the advances that you can make by using that as part of the kind of back to the mothership. But essentially, GE Digital has gone on a strategy to help the business units implement blockchain and seeing where they could actually implement it. And we pair up with our global research centers across the world to help create technologies that our business units could use. And so one example is GE Power. GE Power is one of our largest business units with the grand vision of helping power the world, essentially. And so part of that is the usage of renewable energy via batteries to pair off suppliers and producers of energy via, or the energy that's being produced by wind and solar farms to power those batteries and to combine producers and consumers of that energy. And so they're using blockchain to basically say, is there a way to track where this energy is coming from and where these batteries are getting their energy, and then creating smart contracts on top of that to essentially say how much energy is being used within those batteries, how much is left, is there some sort of optimization that you could actually have with those customers, and trying to create kind of an efficient marketplace associated with that. So that's one way that GE Power is looking to use it, and that's via our digital strategy as we continue to kind of change GE from an industrial company to a digital industrial company. So I think part of that helps influence our decisions as a corporate venture capital arm, because we're looking for investments that are strategic to General Electric, and as business units are more amenable to actually using those technologies, I think it helps our investment case a lot. So I think a lot of the investment case is driven by the business units in this case, and so.
Does a blockchain company that you guys would invest in look different from a conventional startup?
Yeah, I think what's interesting about the blockchain companies, via conventional startups that we typically invest in, they typically have technologies that we like, which are obvious, but they typically have kind of revenue streams, and they've already created kind of companies that already exist and that aren't necessarily, or that are a little bit mature. And I think blockchain companies are not as mature, and a lot of new companies are coming about. So I think we're more, I think we're okay with starting to invest in earlier stage companies when it comes to blockchain, essentially.
So speaking of maturity, Michael, on our prep call, you said, I'm going to be the naysayer, right?
Yeah, I'm sorry to be the bearer of evil tidings. What happens generally in law is that something starts and so on, and the organizations that deal with it are lag behind in trying to see how it works and see how, and in lawyers we say, well, it has to percolate through the courts, which means sometimes it arrives in the Supreme Court, where you really hope that one of the justices has a clerk that understands something about economics and tax so they don't make a fool of themselves. But in the case of both blockchains and cyber currencies, what's happened is that the three big entities that deal with this, the IRS, the Securities and Exchange Commission, and the Commodities Board, are only now starting to come out with a plan on how they're going to really deal with this. The Internal Revenue Service, not too long ago, issued a series of, they did it as a question and answer. If you go to the Internal Revenue Service website and put in blockchains, they'll helpfully move you over to where you can read this for yourself. And you guys, some of you are old enough to remember the movie Jaws, and there was that dun 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 dun, and you know it was coming. Well, now's the dun 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 moment, because what's happening is the Internal Revenue Service is gearing up to go after this, because the amount of internal revenue returns that had any gain from cyber currency were extremely small. And that means they know there's a lot out there. Also, you know, you can put a blockchain company up, and, you know, Delaware has started them and so on. But, you know, it's still subject to SEC rules. You still, unless you have a Section D exemption, you know, you're going to have to file papers. There's going to have to be Edgar reports and all that sort of stuff. And as one tax expert said, because you've got all the information under one key, for them it's going to be like shooting fish in a barrel, which is not something you really want to hear from an enforcement agency. And the other hand is there is some real problems concerning cyber currencies or cryptocurrencies, concerning gain and loss. So far, the Internal Revenue Service and Security Exchange have decided it's a commodity, it's a thing, it's not a currency. Also, if there's swaps, they seemingly will not agree that you know, if you go from one to another, well, it's an even swap. They don't like that. And so there's a number of enforcement measures that I think are coming about that should get everybody to pause as to what they're doing. And something that happened in the real estate trade also could happen in this, and that is you make a huge gain and you're stuck with it when you sell, of course. But then the next week you have a huge loss and you lose everything, you have nothing, but you still have to pay for that gain. And there's a number of accounting issues and so on that are coming up. So I think it behooves everyone and look, I get people come into my office and say, I don't want to pay any taxes, and I heard about this thing, and I said, well, no, it doesn't work this way. And I think everybody has to be aware of these things and keep track of them, because dealing with the Internal Revenue Service can be extremely unpleasant, especially when they think you're trying to pull one past them. And as I was explaining before, there's a real difference between avoidance and evasion, and one can have some very unpleasant consequences.
Cool. Well, thank you. So, you know, in our world of the kind of industrial world, I find that it's actually much harder to know if a company has product market fit than in sort of a conventional SaaS company. I don't know if you guys have found that yet in yours, but you know, for the companies and probably Krishna, you know, do you find that there is something unique to that discovery in your world, and are there things that companies, startup companies and/or investors can do to sort of clarify that? And it comes primarily from that sort of huge amounts of money flowing around.
You're talking specifically around product market fit
Yeah.
for blockchain-based companies?
Yeah.
Yeah, so I mean, I'll speak to our, you know, everyone's experience is different. For Filament, we've had, just to put a kind of a spin on this, we have a board of directors, of course. These are preferred shareholders that invested into the company. And then we have common shareholders, including myself, who manage and run the company. About 2 board meetings ago, so this was September, we were focused very much as a company on an industrial IoT deployment that had this blockchain capability inside of it. It's been our go-to-market strategy for a couple of years. We were having a hard time getting that going. It takes a long time even to get IoT devices deployed industrial-wise. At least we were finding that as a problem. And so we had our board basically sit down with us and say, look, we invested in this economic capability of machines. What are you doing? Building asset trackers. Like, why are you doing this? And we said, because we're trying to show revenue, right? Case studies, like traction matters, especially when, as a founder, you have one job as a CEO, as a startup CEO, which is you do not run out of money. Period, end of story. Everything else is secondary. Do not run out of money. And so it's very, very critical to make sure every time you're fundraising or just closed a round, you're always thinking about the next round, because you cannot sit there and be like, cool, we're going to celebrate now, we got some money in the bank. Like even during a fundraise, you're thinking about how is this going to set me up for the next fundraise. That is how you stay out of trouble and avoid unpleasant consequences, as my esteemed colleague mentioned. And so in short, I think that for us, it was very much around going back to our roots, which is antithesis to saying, let's show some real traction. This particular industry is paying this much for us to do a product or a solution for them. And so it's weird. The blockchain space is strange, I'm finding, in the startup world, because not necessarily all the rules apply. And then you add to that, well, do you want to sell a token? That's a fundraising, event. It's very dangerous right now, but it is, and you need to consider it, truthfully, if you're a startup founder, I believe, although I don't advise towards it right now, but I do think that it needs to be discussed because it will probably mature over time, and it could be a very viable way to not run out of money later.
Actually, just a quick question on that. Have you found that there's that the next or at least the feedback that you've been getting is extremely positive based on that move? Sorry to interrupt.
The next fundraising cycle of the process. So just like she said, there's a ton of money. There's too much money. There's too much capital right now, and it's causing distortions and negative things to happen because people are getting funded who probably shouldn't be funded. There's really not a lot of diligence happening these days, and so if you come to this, at least as Filament, with a ton of diligence having been done on you already, having 409A valuations, having a clean data room, having the things you should be doing if you're taking traditional equity investment, then it does line you up really well for that capital to say, like, okay, this is a legitimate company who has a legitimate Delaware C Corp paperwork. They're above board. There's no enforcements or anything like that against them. It does line you up, but it's hard to find the investors who also tend to be traditional or strategic to be okay with, wow, you've been around for how long and you don't have very much revenue? Like that's the drawback. Like, it doesn't come for free. So it's kind of frustrating, but and nobody wants to get to traction more than I do. But it does take time because this is a whole new industry and the education piece, I think.
Cool.
Let me ask something to you also about this, because I've been interested in this. As far as your investors, how carefully do you vet them? I mean, you probably don't want to be the depository of Saddam Hussein's cash that was left over from the accounts that they didn't find in a Swiss bank. And how carefully can you vet the investors?
Yeah, it's a good question. We are a traditional startup in the sense that we took money traditionally. So we require accredited investors. That means that they have to make over a certain amount and they have to be filed. They get shares for their purchases, preferred shares. So there's a preferred and common shareholder class. It's very, very traditional. So we don't believe we can take money from anyone we don't know, although you never do know these days. One last rule that we have always played by is that we have a lot of strategic investors because we were focused on the industrial IoT. So a piece of advice I got from an advisor, mentor way back early on in my career was, you take 0 strategic money or you take strategic money from 2 in the same round. You never take one, because the one will bull you around and basically make you their custom shop to build whatever they want, whatever pleases them. So for us, we brought in Samsung and Verizon together in our second round so that we could keep them accountable to each other. And it turned out that it worked really well because they were friendly with each other. They were actually very well run. They are very well run venture arms of these companies. They leave you alone. They don't crush you with the weight of their massive multinationals, which often happens to these small startups. And they get, excited because there's, big names that want to work with them. But truth be told is that we don't really have a lot of war stories around strange investors from Eastern Europe buying tokens of ours, because we didn't do that.
And Andrew, anything additional there? If not, I have something else.
Go for it.
Yeah, so on our call, you mentioned you have some specific thoughts around kind of investors at this stage and looking at companies in this world. And I'm curious to kind of explore that a little bit more. Should VCs have a different view when they look at companies like yours and like Allison's? Or if not, just love to hear more about where you were going on that.
Well, first of all, if you are a startup company, you need to listen to what she said. It's brilliant advice. It was spot on. So I think it's very, very good advice. Yes, I think it's a challenge for. I mean, you asked about product market fit. When we were selling a data platform, it's difficult to get an appointment. And you start selling blockchain, all of a sudden you get lots of appointments, and as you say, you get lots of tire kickers. And so, how do you? And as a startup CEO, you want to sell everything that moves, but you have to be focused, and you have to make sure that you're talking to people who are actually going to buy something, which is difficult when you're in front of an executive for a major corporation. And then you've got to show traction. You've got to show revenue. You've got to show customers to the investment community. And if you're in Houston, the investment community is pretty interesting. They say, okay, when you've got 3 to 5 million in revenue, come and talk to us. Well, if you're a blockchain startup or any kind of startup, really, there's a gap between the friends, family, angel investors and 3 to 5 million in revenue, and that gap is, in my opinion, a very underserved market. And so in the Houston market, once again, I'm talking specifically about Houston, there's a lot of people who have told me, go to San Francisco, go to New York, stop wasting your time in Houston, because it is a difficult market to raise money in that chasm, if you like.
Yeah. It's a difficult spot to raise money in throughout the middle of the country. So we invest in just middle of the country, and that is, there's a reason that we're there, is because there are actually very few Series A investors that are making the investments at $1 million to $3 million ARR. And so that I'm not surprised to hear you say that it is tough, and there needs to be more, for sure. So Sharon, have you seen the venture capital investment process? Is it different when it comes to blockchain and maybe more broadly kind of crypto companies from your experience from the attorney side? As it relates to maybe ICOs and how they work alongside.
Sure. So I'll tell you this. I guess a couple of years ago, everybody thought that crowdfunding was going to get rid of VCs, right? And then that really hasn't been the case. And I think it's because teams and startups are starting to realize that VCs don't just provide you with funding, right? It's really about strategic partnerships. It's about the invaluable advice that they're going to be able to provide for you throughout the beginning stages of your company. As well as introducing you to other players in the space. So I would say that the VCs, whether in blockchain or any other space, is going to be around for a long time. Now, yes, a lot of ICOs are going around raising a lot of money from retail investors mostly, but at the same time, they're still looking towards the VCs to give them that infusion of capital. And there's also something else too. So when you raise a lot of money from retail investors, these teams, they learn very quickly that retail investors are very, very demanding, right? So it's really difficult to manage thousands and thousands of people versus a couple of really, really strong strategic VCs.
So Krishna, you mentioned that kind of how GE Digital has been kind of going and exploring the blockchains. Now, if you go into the GEV side, I know you guys are thesis driven, right? So
Yep.
So what are the more sort of the deeper level use cases that you guys are looking for right now as in the world of supply chain?
Yep, absolutely. So we are, so basically digital is going around, going to their different business units and attempting to introduce blockchain as a theme throughout the different business units. What's interesting about blockchain is that blockchain investments is that historically when we look to invest, we look for we look to pair with a or with a startup with the idea of we're going to help them go to market, and with helping them go to market, we're able to at least pair their solution with one of GE's solutions and kind of help enhance their revenue flow or help enhance their traction that way. What's been interesting from a blockchain perspective is that it's been quite internally focused actually. And so it's been how do these blockchain companies actually help GE specifically optimize their operations? And that's unique in the sense that it isn't necessarily pairing with blockchain company to go to one of our customers. It's let's focus this internally within our own business units and attempt to optimize our operations. As GE goes through a lot of changes, optimization is kind of top of mind for us right now, and we're looking to blockchain companies to help us optimize internal operations. And part of that is it's essentially the valuation of these smart contracts and exactly how far this could go down the line. What's the actual ability for a smart contract to actually affect change within General Electric, as well as help us optimize our operations. I don't know if that makes sense, but it's a lot more internally focused than kind of externally focused, which has been typical for a lot of the startups invested in. And then I guess secondly, I think there's a standardization of a process associated when you invest in a SaaS company or a typical kind of hardware company, and that standardization doesn't necessarily exist for blockchain right now. And so it's been interesting to do a little bit of diligence on companies that are focused on blockchain and not a standardization of process or standardization of metrics. And so a lot of it is what is their go-to-market strategy, how good is their technology, and how pervasive they are within kind of their niche industry. But
So for anyone that wants to opine here, what should our expectations be from an adoption perspective for the next 2 years, when it comes to blockchain applications within supply chain?
Probably the best answer I can give you is that January 1, we had one customer and no leads. Now we've got 27 leads and working on 7 pilots. It's just blowing up, going crazy. So I think that you're going to see a huge amount of, you can't put the genie back in the bottle. This is going to be a fundamentally industry-changing technology. It is. Somebody else used the example earlier on about comparing it with the internet. The internet is based on TCP/IP, which is a fairly simple protocol, but once a web browser came out, it just took off. Blockchain is a fairly fundamental technology. It's a very fundamental technology. However, once the use cases and the tools become available, which enable the average supply chain manager or executive to be able to write a smart contract without having to bring the geeks along, then it's going to take off. And it's already taking off, but it's really going to take off. No offense to either of you.
What else?
Yeah, just to add to that, I totally agree. It's absolutely right. I do honestly consider this, blockchain coming into this space as big as what happened when e-commerce changed the internet. Early in the internet, it was academic, and it was, CERN in Switzerland sharing academic papers with little hyperlinks that could show cross-references, et cetera. It was focused on academia. And then along came this simple overlay kind of capability. And now we have Alibaba, and we have eBay, and we have Amazon, and we have on and on and on. What are those going to be of this industry? I don't know. I could not tell you. I do believe though it's as fundamental as that, and it's showing all the same signs as that. And so, I do think that I expect these companies. Most people at the executive or SVP or EVP level of these companies understand what happened when e-commerce came along to the internet. It's still recent memory enough to know that this is going to be a big thing. And I think the same thing is now starting to be assimilated within their minds or within their boardrooms, that the blockchain will absolutely, to your point, disrupt their current system. I had can't say names here, I had a major control systems company we had a call with, and they had an SVP on the phone with all of their group, and they said, we wanted to have this call with you because we know that blockchain is going to change the way we sell our products as a company. We don't know how yet, so can you help us? That's the kind of education I was talking about, that I think that these companies are looking for help. Going from that conversation to making a huge project or a huge deal sale with them is there's a lot to happen. But I believe that it's happening now, and it's starting to become just assumed that, okay, now how are we going to make this happen? But there's a point I'll just want to say, and then I'll finish because I've been talking too much. But there's an article I read recently on CoinDesk that talked about how it's super important that blockchain can't just be thrown at a business process. It really has to be considered fundamental, and that takes a long time to change. Like we do. I mentioned this in my presentation. You do certain processes in business in order to solve problems because there's not inherent trust or whatever. But if you can bring in the blockchain fundamentally, then you may not, it's not that like, let's make this business process on a blockchain, it's that you might not even need that business process anymore. In fact, you might not need that department within your group. You might just be ready to just defer all of that because you have inherent trust now. And until we can get top level people thinking that, we have a ways to go still, but I believe we're in the twilight of it, which is great because it's been exhausting up until this point.
Yeah, I'll just add to that. I mean, I see it every single day, obviously not just in the supply chain industry. I mean, you see it in every corporation, across the country. At large entities, they're trying to create either a blockchain working group or they're trying to. They know the blockchain can help them, basically optimize and become more efficient. They just don't know exactly where. So they're reaching out to consultants and trying to, work it in within their existing system. So. Yeah, the adoption is definitely coming.
Yeah, I think it's the understanding of use cases throughout these industries, and I think right now it's still very confusing, and I think people are kind of grasping at straws to say, I know this technology is likely the future, I just don't know exactly how, and we're attempting to kind of use different small pilots to attempt to figure that out for kind of large companies. So.
Well, all I'd add is simply that since it's a more efficient way of doing business, really, I mean, any way you put it, whether it's in supply chain, contract, law, whatever, eventually it'll be the way people do business. I mean, it's just a question of time. And I think the surprising speed which the courts, for example, have recognized blockchain contracts and not had any real problems with it. To my knowledge, at least one state now allows blockchain companies, which means that everybody else is going to have to do it because of simply competitive reasons. The only fly in the ointment right now, and besides the difficulty of getting corporations to understand, I think, is for the government, and not only our government, but other governments, to come to a regulatory stasis where everybody can rely on this is what we've got to do to not get in trouble. And unfortunately, that's not the case right now because there's a lot of stuff that's in flux. But I certainly agree, blockchain contractually is the wave of the future. And I think, just like, 30 years ago, we were still writing letters to each other. You all too young to remember this. We actually wrote letters to each other and all that, and now all we do is email. But there is one thing I do want to point out, and I've seen in a number of articles that they say this is going to be the end of lawyers. Ha! And I will tell you a story. Vladimir Lenin, Chief Secretary of the Communist Party of the Soviet Union, also a lawyer, addressed the first Congress of Soviet jurists in 1923 after the end of the victorious Red Revolution. And the first thing he said was, lawyers, we thought we'd gotten rid of you, and here you are. If we could survive the Soviet Revolution, I am confident we will survive the blockchain revolution.
So, Rip, do we have time for a few questions? Okay. Go for it.
We have any questions immediately in the room right now. Go ahead, go to the mic and ask your question. We have time for probably 2 to 3 questions, okay?
What's up? There we go. Yeah, so Sharon, you actually said one thing that I thought was particularly intriguing. You mentioned that currently you felt like the talent was far outpacing, the funding was far outpacing the talent. So coming from a fairly mature firm that has recruiting practices in place, what does identifying that talent look like? And how do we build that from within?
It looks like Sharon.
Oh, thanks. I mean, I think it's going to be very, very clear. At the end of the day, what you need are developers, people who know how to code. That's it. It's that simple. So, you know, to put things into perspective, for those of you guys who are not familiar, so the ICO market is basically, it stands for initial coin offerings. And it's where you offer a brand new cryptocurrency in exchange for a more established one, and you use that, so more established like Bitcoin, and then you use that money to fund your startup, right? So in 2017, at the beginning of the year, I probably would get a handful of ICO inquiries a month. By the end of December, when Bitcoin hit almost $20,000, which is an all-time high, I was getting probably about 20 inquiries to do ICOs a week, right? And most of these people, so because I have such a small practice, you know, I tend to be a lot more picky in terms of the work that, you know, I can take on because my resources are limited. Right, and so all the ones that I work on, I require for them to have an MVP, some type of product that I can look at. And I can honestly tell you, all of the people that came to me, you know, 95% of them didn't have it. And they were nowhere close to getting it. Because why? They don't have developers. So it's really, really important to have people who are on the team who actually know how to code. That's it. Because, you know, you need marketing, lawyers, all those people you need them, but they're basically negligible in this space as far as I'm concerned.
So this is a question for Adrian and Krishna, because you guys have money. So when you're looking at these firms to invest in, what are the critical criteria that you're looking at?
Sure.
Adrian, go for it. Yeah.
So we've kind of touched on this, product market fit, right? So we're looking for companies that are right in the stage of where Andrew and Allison are, where there are very specific use cases that we think extend and expand into pretty large market opportunities, but that it's very clear, like that if I did a reference call with either one of their customers, and I could hear from them the value that's being generated from that product. That seems obvious. It's not. It's actually not. It's not that common either in our world. So if I can hear that and I can build up an interesting market opportunity, and there's really strong development, really strong kind of IP effectively there, then that's what gets me excited. I don't know if there's anything different, Krishna.
No, I think that makes a ton of sense, and we do the same thing. I think maybe in addition to that, what I guess strategic investors look for are people like Adrian that have made these investments before, because I think there's a lot of investors coming into this blockchain space, and we want to be with people that have made investments like these before. So we want to pair up with people like Adrian that have been looking at the space for quite some time now.
Time for one more.
Other questions from the room? I'll give you preference over folks on Twitter. Okay, I'll ask a question from Twitter then. The question is, how about investing into blockchain projects set up as consortiums versus your traditional types of businesses? What does that model look like?
It's not something that we would do. I think most conventional venture capital funds wouldn't invest in a consortium. Oftentimes they're non-profit, and so that wouldn't fit for what we do. I think maybe you'd be looking at more government funding, probably, and other sort of non-profit foundational sources.
Okay. Any other answers? You guys agree?
Pretty much, yeah.
Are there any other questions from the room? Okay, with that, thank you all.
Great,
Thank you,
Thank
panel.
you.